Hello, happy Friday, everybody. Thank goodness it's Friday. We're having some technical difficulties, so I hope you can hear us, because otherwise we're just mouths moving.
Yeah, she thought at the very last second, she thought that it said...
Can you hear us, Beth?
Volume muted. Can you hear us?
Can you hear us?
Oh, that probably means they can't.
That probably means they cannot hear us. Oh, she says a heart, so maybe they can hear us.
No, but they can hear us. Should I go check? Oh, yes, they can.
Okay, good. Okay. So, let's get into it since we already wasted, the first. Thank you, Johnny. Hi. So, I have Jim here today. Hi.
Oh, I'm so happy to be here. Yeah.
I know. He's so happy to be here.
Yep.
So, we're going to discuss today, we've been getting some feedback from people that one of the big things that you don't know how to understand is mutual funds. If you're holding mutual funds or when you're thinking of buying mutual funds, what questions are there even to ask? How do I judge performance? Some people on statements, it does not say performance on your statement. It doesn't say what you put in originally, and sometimes, anyway. So what we're going to do today is we're going to cover all that. So no matter what, whether you own mutual funds, you've been holding mutual funds, whether it's in your company's 401k, or just a regular investment account, or you're thinking of buying mutual funds, some of the things you obviously need to think about are the fees. So there are fees. Did you want to say anything?
No, we can get into it.
I always say how much I talk.
Well, she's going to talk 90% of the time, I'd say. 80% to 90% of the time.
Hi, Lena. Thanks for joining.
And, we can jump right in.
Okay. So on mutual funds, your fees, there's three essential fees that you need to know about. First of all, you could be paying a front-loaded fee, is what they talk about. So this is also called an A share. So don't worry about all the fancy A share, C share, I share. That really, what that matters to you is how your fee is charged. That's what all the different share classes mean. So all the same investment, all the same fund, just simply means, how are you charging me my fees?
Yeah, how much are they taking?
Right. So on the upfront, the front-loaded mutual funds, or the A shares, you can be paying up to like 5.75%. I don't know that I've ever seen one over 5.75%.
No, I think that's it, yeah. And that's the majority of them.
Hi, Brian. 5.75% upfront on mutual funds if you're in a brokerage account. Now, what does a brokerage account mean? And we'll get into that in a second. Hi, Erica. So when you pay those front loads, how that works is they charge you the fee up front. So on your statement, immediately you would see you are down 5.75%. If that's what your front fee was, obviously it could be 3.5, it could be 4. But whatever your front fee is, so if you ever bought a mutual fund and you got your first statement, you're like, oh, it's doing awful already. That was probably just the front fee.
And it's important to keep in mind that there's break points on that. So if you're investing in an equity fund under $25,000, you're paying 5.75. What was that smile for?
You can see me. I was going to add something, but I didn't want to interrupt you.
Oh, thanks. Good job.
Well, I was going to add that people might not know what you mean by break point.
A break point. So under $25,000.
So you get a break the more money you put in.
Right. So 5.75 under $25,000, and then your upfront fee goes down from there the more you invest.
Right.
And I think at 100,000. See, now we don't do this type of investment. We don't charge loads on our investments, on our mutual funds.
Front load mutual funds.
Right. We don't do these, but we want to make sure that everyone.
What is the break point? She's asking.
At 100,000, I think for an equity fund it's 2.5.
No, I think it goes down to 3.5. So you would go from, oh wait, never mind, I got it, she said. But you would go from like 5.75, and then once you hit a certain level, and the reason why we say certain levels is because every fund family is different. Fund family meaning company, like Franklin Funds or whatever. Franklin Mutual Funds, American Funds. So the more you put in with that company, the less your fee is. And that's on the front load. Now, the second fee you need to know about is if there's a back load. So sometimes there is no front load, or there's no load. But on the back end, you may be charged a fee. There used to be B shares, which some people still have out there that have been holding mutual funds for a while.
Not many.
Not many, but so if you didn't pay front load on your mutual funds, there could be several reasons for that. But what we're talking about, it could be because there's a back-ended fee. So you have to ask this, where am I paying the fee? Is it front? Is it in the back? Is it annually? Because the other option is you could just pay it annually within the mutual fund. So the reason why I say within the mutual fund is because it's like wrapped into the performance. So if you, let's say, just for even numbers, I'll give you an example. If you have a 1% fee on the mutual fund and the fund did 11% this year, you would see on your statement 10%. So it's net of the fee. It's wrapped in. It's within the fund performance. Am I saying that? You think? Okay. Is that how you would say it?
I suppose, yeah. I mean, you see the net performance, yeah.
Right. So you could have internal fees. And you can actually look those up.
All funds have internal fees.
All funds have internal fees. So you can look up the internal fee, the fee that gets deducted from your performance online. So I would probably say like Morningstar, right? Morningstar or Yahoo Finance.
Any of those
If
websites.
you look under the profile of the fund, so when you pull up any mutual fund, you can go under the profile of the fund and click on or scroll down. You might have to click on fees, or you could just scroll down and you'll see the internal fees. They call it expense ratio. So the expense of the fund, but it's the fees inside the fund. I hope we're hammering that home. So again, for those of you just joining, right, there's a few people joining right now. So we're talking about mutual funds and all the fees that go into mutual funds and how you can better judge your mutual fund performance. On top of that, we're trying to cover all the questions that you might even need to ask before you purchase a mutual fund, or just when you're trying to figure out if you have a good mutual fund. So all about mutual funds today. We're just trying to cover all the ins and outs of that, okay? So back to the fees. So we talked about a front-load mutual fund, so you pay the fees up front. We talked about the back-ended mutual fund, which means you don't pay a fee up front, and if you were to sell it, you have a fee on the back end for a certain time period.
But did we say what that structure is? That's a
No.
C share. Why wouldn't you mention that? You
Well, no,
mentioned
I
what
was
an A
talking
share
about B
is.
shares.
Oh, there are no B shares.
There are. People out there own B shares.
Nobody owns B shares.
Yes, they do.
They stopped it like 15 years ago.
But some of them, I have clients right now that it's converting to the A share.
They've already converted.
Just ask the question. All I'm trying to get them to do. RT likes arguing.
We'll argue. I'll argue. No one owns B shares, and no one's going to buy a B share. They can't
You're
buy
yelling
B shares.
at me. I'm right here.
No one's going to
Nobody's
buy
gonna
a
buy a B share.
So don't
That's
worry
true.
about B shares.
Just ask the question. Anyway, so he's talking about a C share. The way a C share works is you don't pay the fee up front. Do you want to explain it?
Yeah,
Go ahead.
I do. So the A share, real quick. RT's blowing up over there. All right, so A shares, you pay a fee up
thanks,
front.
Ryan. I think so too.
And what does he think?
He said I'm gonna.
Amy's gonna win this.
I already
Yeah,
have,
she
but it's
usually.
fine.
Well, we'll see.
Just explain what a C share is, please.
The A share first. I want to recap the A share. You pay a fee up front, and because you pay a fee up front, you pay no fee to get out. So there's no strings. You sell it whenever you want because the company already made their money.
Right. Good point. Very good point.
Because you pay the front fee, and you have no back fee to get out, you pay about 1%. I would say. Would you agree? That's typically the.
On an A share?
Yeah, you're gonna pay about 1%.
Maybe a little less. Yeah.
Yeah, like American
1%
funds
on an A
is
share,
less.
I would think. Well, yeah.
It's about 1%.
On a stock mutual fund.
Let's go with
1%. Normal.
Yeah, an
Okay.
equity
On an A
fund.
share.
We're talking about stock funds.
Yeah.
On a C share and an A share, a broker will try to sell you on an A share because they'll say you pay the big fee up front, and then you're only going to pay 1% a year after. Again, we don't do this. This is not some investment that we do. We do not charge these fees. But they'll say it's for long term. You pay the fee up front, and you're going to hold it for 10 years or longer, typically 7 years or longer. If you have money that you want for shorter term, then you would go with a C share. That's no fee up front. You're going to pay about double the internal expense, though. You're going to pay about 2% on the internal expense. And you're disagreeing with me on that one?
Yeah.
Okay, well, this one she's wrong, because some of them are more than 2%.
Some of them are more, but that's if they have very active trading on a C share.
Okay, well, you're
Anyway,
you could
but
disagree
yeah,
if
usually
you
about
want.
double the A share.
Yeah, double
fee.
the A share. That's what I said. In my
the
example,
argument
it's
is-
1 and 2. That's my example.
Okay, good example.
1% for an A share, 2% for a C share. and there's no fee to get out after 12 months. If you get out within 12 months, they're going to charge 1% more to get out. So an advisor might say, if this is money for 3 years and you want to be in the equity fund, no fee in, no fee out as long as you hold it for 12 months. You're going to pay 2% internal, which is high, but at least you don't have to pay the 575. That's what a commissioned advisor how they'll try to spin it.
So you're just basically trying to think, how long will I hold this fund from the beginning, and trying to guess that. It's really tough to guess that. So if you think you're less than a 5-year time frame, it is probably smarter to go with the C share. If you're thinking more than a 5-year time frame, then go with an A share. But the thing about all that is that that's only if you stay with the same company. So sometimes, if you're at an institution where the advisor changes sometimes, right? So you've had the same advisor for a while and now somebody new comes in. By the way, speaking of new people, we're talking about mutual funds and the fees on mutual funds and how you can know what questions to ask and how you can kind of decipher what might be right for you. Okay, so sometimes advisors will say they don't like this fund and they'll switch you to a different fund. Well, now you're going to pay the fees all over again if you're switching fund families.
Yeah, don't ever let somebody do that to you.
Okay, so if you're in like an Oppenheimer as a common one and they want to switch you to Franklin, you're going to now pay fees to Franklin. They have not gotten the fees yet. So it's not the advisor only or the company that you're with. Let's say you're with like I don't know, what's a big brokerage firm? A Fidelity or something. I pick on Fidelity. Nothing bad against Fidelity. I'm trying to give an example.
Nothing good.
So when you go to a company and they're selling you these mutual funds, don't let them switch the mutual fund company that you have. So if you have somebody that manages investments ongoing for a flat fee, which is like what we do. So if you have an advisor that does switch your mutual funds, but you just pay a flat fee no matter how many trades they place, don't worry, you're not paying those fees.
Right.
Okay? So don't worry about that. This is when you're in a commissioned account. So this is, again, a question you need to ask. Am I in a commission account or a brokerage account? A question. Jot that down. You need to ask that. Am I in a brokerage account? Am I paying commissions? Am I paying per transaction when you make a trade? Or am I paying a flat fee? A flat percentage fee to you for your investment advice? Big difference. So you have to ask this question, okay? This determines what fees you're paying on your mutual funds. Then if you are in a brokerage account, or if you are, hi Rob, long time no talk. If you are in a brokerage account and you are in a commission account, then that's what you ask, what we're talking about now, the A share, C share, all this stuff. Are you in an A share? Did you pay the fees up front? Am I going to pay the fees if I sell the fund? How much am I paying annually? By the way, again, for the people that join, you can look that up. Okay, so go to any public website, Yahoo Finance, CNBC, whatever, and look up that internal fee that you're paying on your mutual funds. Now, another way to kind of tell how your mutual funds are doing. So Morningstar, this is not like an end-all be-all method. This is one other way, by the way, that you can just add to your list. But Morningstar gives a star rating out of 5 stars.
Oh my God! Go ahead.
It's not
Those
an
star
end-all
ratings
be-all.
mean almost nothing because it's all past performance.
I was just gonna say it's track record.
So why would you bring up star ratings on
Because if the manager
fees?
hasn't changed, don't you want to know the track record of the fund?
I guess.
If they're on their own and they don't have an advisor giving them advice.
I know. Okay.
If they're on their own,
but yeah,
a good way to look up is the Morningstar rating. I mean, it's at least something. It's a place to start. Don't buy or sell a fund based on the Morningstar rating. I'm just saying it helps you in your research to at least see what it says on Morningstar. Yes?
Yeah. Yes, but don't put a lot of weighting in the star rating because we've had people come in and say, I got all 5 stars. Mm-hmm. Well, that's great. They have been great, but that doesn't mean anything going forward. Maybe the manager changed.
We love you too. Maybe the manager changed, or maybe
maybe just
the goal of the fund changed, or maybe the sector has not been performing.
Yeah, the sector rotated out.
Right.
We don't need to look
These
at
are
star
all
ratings,
these things
really.
they need to know, though. So say that.
We're talking about fees.
We're talking about mutual funds in general and how to know what questions to ask. So the other thing is on mutual funds. If you ever wonder, you see, maybe you don't see. I shouldn't assume you see. If you look on like a mutual fund or mutual fund, a stock channel or an investment channel, so like a Bloomberg or a CNBC, and you see all this stuff flying across the screen, right? Your mutual fund won't be on there. Mutual funds trade once a day. So something you need to understand is if you look up your account in the morning and you look up your account in the afternoon, nothing will change if you only own mutual funds. Okay, they change once a day. The reason why I think that's important is because when the market does kind of go crazy sometimes, and sometimes it does, you know, it'll start in the morning, the market will be down 50 points, and then the market will all of a sudden start going worse and worse and worse, and by the end of the day it's down 300 points, 400 points. When you're in a mutual fund, there's nothing that you can do, okay? You can get out and you can sell, but you're going to sell at the end of the day no matter what. So this is a big reason why ETF or exchange traded funds which is just an index, you know, I probably should have explained the basics of a mutual fund in the beginning. We have all different audiences, so I want to acknowledge that. We have all different levels of knowledge on here, so forgive us if we talk over your head or if we talk, you know, very basic. So a mutual fund and an ETF or an index fund is just a basket of investments. So you just own more than one thing. Instead of buying one stock in McDonald's, you're buying an index of, are you checking your watch? That's rude. You're buying an index of multiple stocks, okay? So when you buy an index or an ETF, you own multiple things in that one position in your account, okay? So mutual funds trade once a day. So there's nothing that you can do in the day, during the day, all right? Why are you laughing now?
I don't know. Can we talk about fees?
Sure. You have more to add on fees? I was just trying to give them other knowledge on mutual funds.
Well, how do people see
this is
their
not
performance?
scripted, by the way. If you can.
Clearly not scripted.
Oh, how can
I didn't
people
even want to be on this call,
Right.
this live. So
Well, he listened to his wife. Happy wife, happy life.
So if I'm getting dragged in, this is what you get.
Okay.
So what if we started the call by saying that
How you judge performance.
yeah, performance. A lot of the statements don't have performance. It just has your market value, your share price, the number of shares, and
that's it.
And that's it. Maybe it'll show the dividend on it as well.
Right. Sometimes it doesn't even show your cost basis or what you bought it at. So if you put in $10,000 originating, sometimes it doesn't even say that on the statement. I know, yes, stop whining. RT says stop whining. Thank you. Sometimes it is almost impossible for you unless you've kept every statement. And I know some people do, but even if you keep every statement, sometimes people don't know how to actually judge performance. So if you take, for instance, like your December year-end statement, and you take what your value is today, the difference is how you've done, okay? And if you've owned the same mutual funds, then you could go back and look at what was that mutual fund per share. So you own different shares of mutual funds. We'll talk about taxation in a second too. Yes, thank you, Tamara. We'll get to taxes and how mutual funds are taxed. So when you reinvest dividends, so if you originally put in $10,000, when you reinvest dividends, every month that adds to that $10,000. So
well, if you're reinvesting dividends.
That's what I just said.
Okay.
You're not listening like me.
Maybe not.
When you put in $10,000, and when every time you reinvest a dividend, dividends are what you get paid for being in the mutual fund. They pay you that. Some of them, some mutual funds do, pay you for being in that mutual fund. So it'll add back into that $10,000. So on your statement, now you might see cost basis, or what you put in is $10,380 because they're adding in the dividends. Because technically, you could take that check. You could take those dividends. So in their mind, you're not taking the dividends, you're actually writing them a check right back. You're giving it back to them to buy more shares. So you're taxed on those. So Tamara mentioned taxation. So mutual funds, the trading activity that goes on within a mutual fund, so again, I mentioned it's multiple investments, okay? And this is probably getting not very interesting. I feel like we need like a prop or something to like draw a picture.
Well, let me circle back to what you just said. So
About taxes or about the dividends?
Well, and the performance, really, because the 10,000, in your example, you said 10,000 goes in, you bring in, what'd you say, 3%?
I just said $380.
$380.
I didn't say a percentage.
So say for the year you get $380 or 3.8% dividend for the year. And let's say at the end of the year, your account value is 10,200. Well, if you look at your statement, it's going to show that you're actually down.
Right.
So in this example, you put in 10,000, so it's easy. Oh, I made $200. I know I'm up. It gets a little tricky when you have odd numbers and you forget how much you put in and things like that. You could always go in and look at your cost basis page. So if you have online access, go to your cost basis page and you can see exactly how much you started with and how many dividends did reinvest over the year or the last few years.
Right.
So, because a lot of times in that example, it's going to look like, well, I'm down on it because it says I put in $10,380, but you really didn't. You put in $10,000. You reinvested dividends of $380.
Paid you the $380. Yeah, but you would only owe tax. What you owe taxes on is different. So on mutual funds, you owe taxes twice, unfortunately. So if you've ever owned a mutual fund and they sent you a tax form at the end of the year, you're paying taxes on all the trading activity that they're doing with those stocks that you own within the mutual fund. So, there's a group of people sitting around a conference room right here making decisions every day within the mutual fund. That's what you're paying a fee for. So when they make decisions and they buy and sell, then you pay taxes on that if they're up. So when you get a tax form at the end of the year that needs to go to your tax advisor because you owe taxes on that, even though you haven't sold the mutual fund. That is another, let's call it a downside. When you're not in a retirement account or not in an IRA, you owe taxes on that, on those the trading activity. So whereas on an ETF, an exchange traded fund, you don't owe taxes until you sell the fund. So that's another tax planning strategy that we could get into. But another way to judge when you're looking at your performance on the mutual funds.
Well, in an ETF, the thing about ETFs is it's more of a buy and hold inside the ETF. But if they were to make changes, there would be taxes on that.
No, not an ETF. No, not until you sell it. It's traded like a stock. It's treated like a stock.
It's traded like a stock?
Yeah. No, not taxed.
Oh, I'm going to have to look at that one.
Google. Yeah, so...
How sure are you on a scale from 1 to 10?
9.8.
Really?
Yeah.
Really?
Tamara will let us know in a second. So, the taxation on a mutual fund. So if you're in an IRA, though, a lot of people, like from an old employer, have, I have an old 401k. What do I do with it? It's just sitting there with mutual funds. Well, you should look at it. Or you should at least get it to somebody who can look at it, because mutual fund managers change. And mutual funds over time change. And you want to make sure you know if you're reinvesting the dividends or if you're not. Like, these are all questions. This was one of the main things some of the people joining just now that we were discussing on mutual funds, okay? So we're discussing the fees. We're discussing a lot of the things, how to tell performance and how to know what questions to even ask. Go ahead.
If I'm right, I'm going to bring this up next week. If I'm wrong...
Are you doing this next week?
I might. If I'm wrong, I just won't bring it up again. And then if you forget, then you forget.
I won't forget. But anyway, so what we've covered is fees. So you pay, if you're in a brokerage account, one question to ask, am I in a brokerage account? Are you paying front load fees, back end fees, or how much is my fee annually? Or if you're in a fee-based account, you can just look up the internal expense of the mutual fund. All mutual funds have internal fees. You have to pay the fund manager. You have to pay the mutual fund company. They all have fees. So if you have an advisor and
Even Vanguard. These Vanguard people.
I know. Yeah, check the performance on those. So if you go, year over year, or a lot of times when you pull up, see, Amy is right on the ETF taxes.
Oh, Tamara, what does Tamara know?
She has the internet. Yeah, I'm right.
That doesn't make any sense.
Honey, that's how ETFs are taxed. Yeah. Anyway.
I think that's just because there's not a lot of activity in ETFs.
No.
Who pays the tax then on the gain? If I have Google inside a large cap ETF and I want to take my gains and get out of Google in the ETF, if I'm the portfolio manager.
I don't care who pays the taxes.
So who pays the taxes?
The client doesn't pay the taxes.
No, I think that's bullshit. I think they do pay the taxes.
Can you?
I think they do.
Jackie, hi Jackie. You're joining at a time when this is happening here. We're talking about mutual funds and fees and how to judge your
We're wrapping
performance
up
on your
right
mutual
now.
funds. We are.
Wrap it up.
But the taxation on mutual funds is important outside of an investment account. So if you have like an old 401k, all this taxation stuff doesn't apply to you, okay? So just understand that. It does not apply to you if you're in a 401k or if you're in an IRA. Mutual fund, the mutual fund taxation doesn't apply to you anyway, so it doesn't make a difference. But you need to know your internal fees. So even when the advisor says, I'm not charging you fees, the mutual funds have internal fees. So just ask what your mutual fund fee is or look it up. We gave you the tools to look it up. Anything else you want to know, email us, go to our website, novawealthmanagement.com. Reach out to us, email us, contact us right from the website. We always put stuff on Twitter, like resources like this. Actually, I think I posted once where to go. Maybe I should post it again, where to find your mutual fund fees. Or actually, there's an analyzer right on FINRA that you can analyze the fees on FINRA. I will post that on Twitter. So at Novakovich Amy or at Jim Novakovich, but I'll tweet that and I'll actually put it on LinkedIn too. The FINRA site of where you can analyze the fees. You can put them side by side, the share classes.
It's a great tool.
It is a good tool.
Yeah.
Thanks, Jackie. So and I'll post on the other resources too, but we always have resources on our website, so go check us out on social media, and then we have really short, quick videos. We will post the questions to ask and the FINRA, and we'll post the questions to ask too. Very good.
Good job, Tamara.
Good job, Tamara. We will post the questions to ask too. And we'll post that Amy was right on that debate.
No, we'll see. I'm not buying that. Somebody's gonna pay the tax.
Okay. I don't care. All I care
Well,
is
do you
that the
think it
client
just
pays
goes
the
up
tax
in
and the clients
smoke?
don't pay the tax.
No, no one pays the tax.
No, maybe the company pays the tax.
The
I don't care who
company's
pays
not
the tax.
paying your tax. I'm right on that. We'll let you know next week. I think I'm still right.
So anyway, check us out on our YouTube channel, Nova Wealth Management, our website, novawealthmanagement.com, and obviously we'll see you next week. Bye. Have a good weekend.
Bye.